in time of chaos, stay calm and stay united and stay relevant.
We are entering another round of Cold War, but this time between the US and China.
They always put this question out there is, do you foresee a recession? So today we'll talk about a very important topic. I don't normally talk about politics, but now politics affects everyone. So geopolitics is no longer background noise. It is the headline news for the past few weeks. Tariffs, trade wars, and today's topic also is investment. So it's largely affecting investment decisions today. It's affected markets, affected even local businesses, which we'll talk about today as well. And the escalating trade wars bring changes as well to different countries around the world, especially for us here in Singapore and Asia. And the world of investing is being redefined as we speak. So today we bring you profit versus power, navigating geopolitical tensions and trade wars in investment strategies. This episode is brought to you by InCorp Singapore and Ascentium Company. And like I said, thank you for joining us live on Zoom again. So if you have any questions during the webinar, please put it into the Q&A tab. And if you're watching live, please put in live in the chat as well. Our team will be there to assist you. And today we have two very special guests. Number one, we have Ying. All right, so Yie Ying Tan, who is the Head of Family Office and Fund Services. And we have a special guest here, which is Dr. O.A. San. And getting to know Doctor, he is an avid commentator and columnist on politics, economics, and also current affairs. And he's a frequent speaker at high-level international forums. So he also provides strategic and global advisory to commercial institutions and also political institutions as well. And he is also the founder of Pacific Research Center and also a senior fellow at the Singapore Institute of International Affairs. Ying and Doctor, welcome to the show.
Thank you.
So let's start it off with the first question. In the past few weeks, there's a lot of news. There's tariffs going up. There's tariffs doubling. There's how many percent, and what are the responses of these countries? What is the president doing? How is this prime minister responding? So my first question to Dr. O, how should investors read this news?
Well, of course, President would provide you with a lot of premonitions, a lot of pronouncements every single day, right? But I think it's very important amidst this, what we call a trade war nowadays, to sort of be careful about what is actually the rhetoric, the posturing on the one hand, and what actually would come out at the end of this trade war. No trade war could go on forever. It would sort of conclude at some point, but of course new trade wars would come, right? So for example, every single day you will see President either raising or lowering tariffs on certain regions, certain countries, and so on. But that's really not, I think, the main aim of what he's doing. I think what he's trying to do is actually to make sure that most countries around the world would negotiate again with the United States on new trade terms, new trading frameworks, and so on. And that's already taking shape. Already, I think, close to, let's say, 70 something, or even some say 100 countries are already talking to the United States to renegotiate these sort of trade terms. So you might be very tempted to react every single day to President Trump, but perhaps we should be more patient and wait till the conclusion of this latest round of trade negotiations. Of course, some friends may also track all these stock markets, the price of gold, the price for oil, and so on. Well, if you are speculating in these commodities in the stock markets and so on, that's fine. That's for short-term gains and so on. But I think primarily you should still focus on, for example, the fundamentals of the businesses you invest. And as we go further, you will see that perhaps would be very important here.
Thank you, Dr. O. So next question I have for Ying. how are they responding so far? Like, where are they and how are they responding?
If we talk about the mega trend and the major forces, I mean, firstly, we are not the one who is providing investment advices.
Yep.
What I could say is that all the experts are saying same thing, but in different ways. We are now moving into new era, and we should be looking into an era of slow growth and sticky inflation. And that's how the investor should be responding to it. So at the end of the day, the mega trends are a few of them, and we're looking at, because there are always opportunity in disruptions. For example, deglobalization, how does it reshape the supply chain? And the second thing will be the AI and automation, right? Companies are looking for improve in real productivity and improve their profit margin. And the third one will be energy transition, right? So how the investors should be looking into projects relating to a structural shift to climate resilient and adaptations. And the last one is the biotechnology that is relating to the aging populations. So anything that's relating to aging populations, it's investor should be looking at.
Thank you, Ying. That is excellent responses, and I hear a number of topics as well that we will cover in our upcoming episodes as well. So we're doing this as a series, and one thing that Ying mentioned just now that's very important is this is not financial advice. We are talking on how to navigate, and also we are covering what's happening out there with, of course, an expert like Dr. O, but not by all means not financial advice. So next question to Dr. O, which is very timely and very important, is what industries are most vulnerable at the moment?
Well, the most obvious that you are seeing in the headlines would be all these computer chips, right? Or to be more precise, the supply chain, the global supply chain for all these computer chips would be disrupted, primarily because this sort of geopolitical confrontations between the United States and China centers a lot on high technology. So any sort of, let's say, high-tech products or services which will require a lot of computing power and thereby a lot of, shall we say, very high speed and high power computer chips, they would be quite affected, I think. So that you would need to be mindful of. But of course, there are also some other associated industries. Let's say the manufacturing of aircrafts, of cars, and so on. But of course, China would have retaliatory tariffs against the US, right? So you see, then they would go slow on purchasing American daily products, American grains. So this sort of markets, even though they're staples, they're commodities, they might also be hit a little bit. So it's very wide ranging, including sometimes you go and buy some of the daily items. Anything ranging from food supply to some of your towels and so on, all this could be hit as well. So, but again, just like Ying said, you need to see this not as unsurmountable difficulties, but rather as challenges to be, number one, overcome, and number two, whether you could see some opportunities out of them. Yeah.
Yep. Thank you, Dr. That's some great points. And just to address those watching live again, so we are taking in questions at the end of the session. So please put in your questions in the Q&A tab, and we will answer them if time permits. So you mentioned cost of living, Dr. O. So how does this affect inflation and also, most importantly, interest rates?
Yeah, I think when President announced this latest round of very high so-called reciprocal tariffs, a lot of observers are worried that this might bring about the so-called double whammy. Double whammy in the sense that because you impose high tariffs, right? So a lot of goods which are previously the sort of manufactured overseas, well, nowadays they could not be exported to the US due to high tariffs. So it might bring about high inflation, let's say in the United States, but that would also ripple effect on the rest of the world. So on the one hand, high inflation. Then the US Fed would be very tempted to raise interest rates in order to counter that inflation, right? But if you raise interest rate, that's bad news both for the US economy and again, by extension, the rest of the world economy, because there are less, shall we say, funds going around to stimulate the economy. So to tame the inflation, you need high interest rate, but high interest rate would bring about, shall we say, slower growth. And if President frequently urging the U.S. Federal Reserve to lower interest rate instead, well, that's nice. You have a lot of fund flowing around, but that would further stimulate also inflation, because when money is around, then you tend to you tend to spend, and when you spend, the prices typically go up. So it's a very trying challenge nowadays. But President is, I think, banking on, for example, that if the Americans could not import from overseas, then they will manufacture back home. And when you manufacture a lot of goods, then inflation will not be so high because there's a lot of supply. And when inflation is not so high, then you don't need to raise interest rates. You could sort of maintain it or even lower it. And when you do so, you further stimulate the economy. But that's in the best scenario. We don't know. We simply don't know because it also depends on, as I said, the outcomes of these trade negotiations, whether it would really be so high tariffs, or it might actually have the opposite effect, that America and let's say its negotiating partner, let's say Japan, will both lower the tariff to almost zero. That could also be an outcome. Yeah.
Yes, as I gather, everything is still up in the air. It all depends on the negotiations. We have a question from the attendee. They always ask this question. They always put this question up there is, do you foresee a recession?
Well, I think a slowdown across the world, not just in America, it's almost inevitable. You wouldn't, well, in America, for example, you perhaps would not see a 3% growth. You might see growth which is 1% or even close to zero. But to go into a recession, I think it's too early to tell. Same thing with the rest of the world, because I think this round of trade negotiations, it will go on for a month or two. Afterwards, you would see this sort of tariffs. Well, in fact, even now, the tariffs, it's fixed at about 10% for most of the world. I mean, American tariffs, except for China. And the outcome of this round of negotiation will be such that I think, it's either 10% or lower, in my humble opinion. And that would not have a significant so-called damping effect on the world economy. Yeah.
Yes, in Chinese, we call crisis 危机.
Yeah.
Right? That means there's danger, there's opportunity.
Yep.
So moving to opportunity, what are the markets or the countries that you see can benefit from this?
Well, tariffs are imposed on most countries, right? So it's nowadays a bit more difficult to sort of try to, shall we say, circumnavigate or to avoid this sort of American tariffs. But many of the major economies in Southeast Asia, they are well known for both their manufacturing capabilities as well as their trading tradition. So, for example, I think nowadays everybody's favorite or darling would be Vietnam, right? And even though the Americans slapped on a tariff for up to, if I remember correctly, 46%, Vietnam was very fast in responding to that and say, I'm going to lower American goods tariffs to zero and hope the Americans would do the same. So at the end, it wouldn't be 46%, it would be significantly lower. Other countries such as Malaysia, they have very significant computer chips manufacturing capabilities. Philippines has, I think, only 17% tariffs with the US. These are all major economies in Southeast Asia. Of course, India, the Prime Minister of India, went to see for this latest tariffs announcements. So all these are markets to watch as we negotiate this tariff deep waters, shall we say.
Yes, every day I'm watching the news. There's so much to watch nowadays, and
Yeah.
especially it happens in US times. It's
Yeah.
always overnight, so it's very interesting. So next, I'll move on to Ying. Right. So Ying, how all these things that Dr. O shared, how does it shape the investment landscape?
I think pretty much as I mentioned earlier, I mean, at the end of the day, we'll be looking at a mega trend and also looking at a global rather than a short-term gain. So I mentioned earlier before, there are a few mega trends that is shaping the investment landscape. The globalizations, where the manufacturing will be going to, where the company will be going to manufacture, that it's going to make their goods more profitable. And secondly, will be like I said, the AI and the automation. The thirdly will be aging populations, and the fourth mega trends will be digital assets. It seems to be very popular these days. So again, these are the things that we saw, and I think the investors should think globally and strategic smartly. And the trends is definitely looking into regionalization of their investment and respond with agility. So these are really the key things that we will be foreseeing.
I want to reinforce a little bit what Ying just said and to elaborate a little bit more. I think Ying mentioned several sectors which are sort of, shall we say, long-term growth sectors. Why are they long-term growth sectors? For example, like services for the aging population, right? I mean, you cannot reverse age, right? So it's almost irreversible. People around the world are getting older and they need, for example, some sort of care, healthcare, and various other services. So that's, of course, it will be a growth sector, right? And then, for example, all this so-called renewable energy, despite President preference for oil and gas and so on, hey, oil and gas will one day run out, right? So you need some sort of solar, some sort of hydropower, some sort of geothermal, and even wave energy and so on. So that really, it's a way to go in the future, whether you like it or not. And AI, all these automations, I mean, well, you cannot just abandon and go back to manual labor, right? So that's why you should sort of have faith in some of these sectors and keep on working on them or investing in them. That's just the way it is.
Yes, I think that's absolutely right. Having a long-term view, people will age. AI will be very important one day. So invest, look into the long term, right? These are the industries that will still prevail. So moving back to Ying as well. So we talked a lot about tariffs today, but what are the challenges that the high net worth families and also people you work with, the fund managers, face?
If we look at how tariffs is affecting the distributions of the high net worth individual, high net worth populations, put it this way: tariffs it's not gonna move people overnight, right? But they will shift supply chain. They will change the probably shift the trade route as well as the investment flow. Right. So at the end of the day, it will then influence where the wealth will be created and where it will end or lands. So, today, US has about 40% shares of the global high net worth individual with more than $10 million wealth. And the next in line is the Chinese, which is about 20%. Thereafter is Japan and India and so on, right? And these statistics is not gonna change dramatically overnight because the tariffs impact is global, and the AI-driven growth is gonna likely to further enhance or enrich the US and the Chinese. So I think the tariff regimes, what we see is accelerating the regionalizations of the investment. Take, for example, ASEAN or the EU, they are becoming a more self-reliant economy. And hence the businesses will have to think about, where should they invest, where should they manufacture, and they should then diversify how and where they operate, and at the same time move towards, again, regional agility is the key word that I've seen so far. I mean, that appears again and again, because at the end of the day, structuring and planning is very important, and because we have to pivot very fast, to respond to this fast changing economy.
Yep. Thank you. So again, to our audience, thank you for watching us live. So we still have time to take questions. So if you're watching us live, please put your questions into the Q&A tab on Zoom. And we'll move on to the last few questions. So today we have a lot of talk about the things that are happening, the tariffs, the emerging technologies, AI, and things like that. So as an investor or as a family office, what sort of mindset should we have, Dr. O?
Well, for me, there are two key points. Whether you're a country, whether you're a business, whether you're a family, or even as you are an individual, in terms of, let's say, your financial planning, your investments, and so on. Well, for example, you need to be resilient. A country must be self-sufficient, hopefully, even for a country as Singapore, should be very resilient and self-sufficient in its food, in its energy, and sometimes even in its medical supply that we saw during the pandemic and so on. So, well, you need to be careful about these things. For example, if you have more hinterland in countries like Malaysia, Indonesia, and so on, well, you should grow more food crops in addition to your cash crops, for example, such that during a time of emergency, during time of crisis, your population could be well fed. Countries should, if they're endowed with, let's say, oil and gas, if they're endowed with sunshine and plenty of rainfalls, well, then either you extract more oil and gas, or you harvest or harness more solar and hydro powers and so on to make sure that your own energy supply would be sufficient. And well, sometimes you could also strategize a little bit. Let's say you don't have a lot of medical supplies stockpile in your countries, right? Well, then perhaps you should position yourself to go into this global supply chain. Well, not only for computer chips, but also for medical supply, right? Such that if crisis hits again, you'll be prepared. And number two is closely linked to that. You need to be more versatile. At the same time that you're resilient, you take care of yourselves as a country, as a person, as a family, as a business. You must also look out for well, this is a bit tricky. Sometimes there are opportunities which are very fashionable, right? And but fashionable today may not be what is fashionable tomorrow, and so on. So you need to look into sectors which you are convinced will be quite long lasting. As I say, aging population. I mean, despite some of my friends who claim they can reverse age, but you age, right? So you need to go into sectors, explore. I wouldn't say you go into, but you explore sectors which could be profitable. Let's say not in the short term, but perhaps in the longer term. You should actively look out for those sectors. So resilience plus I will call it versatility. Yeah.
Yes, thank you, Dr. O. So, Ying, working with family officers and investors, what sort of mindset should they have?
So what stood out for me was what what the Minister of Education of Singapore, Mr. Chan, said during his recent interview with CNA. So he said, in short, in time of chaos, stay calm and stay united and stay relevant. So, I mean, don't jump into or overreact to any headlines. Speak clearly, okay, and then respond with calmness, right? So, and then secondly is to really understand what is your counterparts or your stakeholders are thinking, right? And stay relevant, be indispensable in the supply chain. And I think the last thing that I really like is that it's important to keep your people united. So when the people are united and aligned, then only you can respond to crisis in a more sort of with agility. So I think these are very, very important, whether it's for the countries or for the business as a leader. These are the things that we should all keep in mind.
Yes, stay calm for now. So this very timely webinar today is actually brought to you by InCorp Singapore. So I'll ask Ying also, what is InCorp Singapore and what services do you provide?
InCorp Group of Companies is a global professional service firm under Ascentium Group. We have a strong focus in Asia. We are headquartered in Singapore, operate in 9 markets of the APAC region. Moving to the west, we have an office in Dubai. We also have offices in BVI and Cayman for clients who is looking for offshore solution. We work with a wide range of clients, about 30,000 globally, across different industries. What we deal with them, what we help them is that we deal with the nuts and bolts of the businesses, such as incorporation of the company, tax compliance, payroll, and so on. As private wealth grows significantly over the past 15 years, according to UBS Wealth Reports, it's about 177%. And the Asian's private banking's AUM has reached its new high. There has been a growing focus in supporting the families by protecting and preserving their wealth. And what we do here is we set up family offices as well as put in place proper succession plan for those families. At the same time, we also support fund manager in administering the investment entities that hold those wealth. Well, I am based in Singapore, but I work very closely with my counterparts in other countries. What we aim to do is to support our clients adopt a multi-jurisdictional approach, and we act as a single point of clarity to help clients navigate the challenges they are facing.
Thank you, Ying. And back to our audience again. All right, so thank you for watching this. So if you have any questions about InCorp services, you can put it into the Q&A as well. Our team, if we do not manage to answer any of your questions, we'll answer them after today's webinar. And we'll move on to some of the questions that our audience have. So the one that is hanging over a lot of our heads and is like the main focus, of course, is the relations between US and China. So this is a question coming from Hector Po. All right. So what is the view, Dr. O, the long-term view, what will happen between US and China?
Well, we actually have sort of an experience dealing with this kind of situation after the Second World War and until, let's say, 1991, we have about half a century of Cold War, right, between the Americans and the Soviets. So in a sense, we are entering another round of Cold War. but this time between the US and China. Well, what is a Cold War? By definition, it's not a hot war, right? So you wouldn't see them, well, you most likely wouldn't see them really fighting each other out. But, well, this sort of trade wars, this sort of proxy war sometimes would be there. And nowadays, with advancement in technology, it's even more serious. Sometimes you could launch a very silent attack on each other's systems and so on. But we have to get used to it, just like we have gotten used to it during the Cold War between the Soviets and the Americans. We had to get used to it between the Americans and the Chinese. And this time, perhaps, as I said, on the one hand, it's more complex than the Cold War, but on the other hand, it's perhaps less intense than the Cold War because, well, despite the current very high tariffs imposed on each other, I think they will still trade with one another. After the trade negotiations, they will still trade with one another with not so significant tariffs. And because they have to trade with one another, they cannot engage in, shall we say, hot war with one another. But it's the kind of war we had to get used to here. Like our parents during with the Cold War, round one. This is round two.
As they say, winter is coming, perhaps, right?
Autumn, I would say.
Autumn. It's not so cold yet.
Yeah.
So, bringing us closer to home. So we have a question from Jin Yang. So Ying, I think you can take this question. What does this mean for Singapore, and how is the government responding?
Well, for a trade-dependent economy like Singapore, a 10% tariff will have some implication. I mean, the government is responding to it proactively in navigating these challenges. So, number one, they have formed a economic resilience task force that's led by the Deputy Prime Minister to really support the businesses and the people in the affected sector, and also to develop a long-term strategy. Secondly, the Monetary Authority of Singapore has slowed down the appreciation of the dollar to again support growth, and also they are, actively engaged with their U.S. Counterparts to seek tariff exemptions. And of course, the Prime Minister Lawrence Wong is actively pushing for zero tariff to promote regional trade in ASEAN. So, I mean, having said all this, Singapore has been a trusted financial hub in the world for quite a long time. And, it's all because of they have the combination of political stability, strong rule of law, and also, the investors are very attracted by this robust tax treaty network as well as the infrastructure. And not forgetting, the country is very strategically located at the heart of Asia. The investor could easily access to the fast-growing market around the regions and make this place a perfect base to really set themselves up as a headquarter.
Thank you, Ying. This brings us to the next question. So there's a question from Gladys Ng here. And she said, how does this affect small businesses?
I think we point out a few things. Number one, it's very important to make sure financially you have sufficient reserve. That's one thing that I think Dr. O mentioned earlier, to make sure that you are able to respond to the challenges. And I think secondly is really, and look at the area where you could improve real productivity. How do you structure your investment? How do you structure your businesses around the tariffs? Dr. O, what do you think?
Yeah, I think there should be more emphasis, I think, sometimes on, let's say, local productions, let's say more artisanal products and so on. You look at countries like, let's say, Japan and France and so on. Well, we have always thought of their economies as being not performing extremely well or stellar performance, right? But you see countries like this, they keep on going. Why? Because there's a lot of emphasis on, let's say, the small and medium and micro enterprises, the artisans. They make their cheese in France, they make their sushis in Japan, and so on. To serve, sometimes you go to Japan, this sort of sushi counter is only for 3 persons or 4 persons, right? But sometimes in this part of the world, well, perhaps we should pride ourselves. We are actually the fastest growing region in the world. But sometimes we are, for perhaps aiming, in my humble opinion, slightly too high. Huh? Immediately we are successful with one outlet, we want to franchise it to like tens or dozens of outlets and so on, and we will grow very, very fast. But when difficult times hit, then you might have to flop. Huh? So perhaps a renewed focus on more local productions, artisanal finesse, and so on. I think that would really help our SMEs, be it in Singapore or in Malaysia. Yeah.
Yes, I think resilience is key.
Yeah.
Of course, be prepared. And last, one more question that we have from Kaden Tan. So it's more for you, Dr. O, this question. What do you think will happen to the trade wars? Will we see more trade wars happening?
Well, with President in charge, and let's say this round of trade war concludes, and in a year or so, he still feels that the US is being so-called shortchanged. From his point of view, he may launch another round of trade war. But I think we are actually looking at not necessarily the, shall we say, the cancellation of free trade. It's just that we are renegotiating the trade terms. Because on the one hand, free trade may be fine, but on the other hand, trade should be fair, in his humble opinion, that the sort of deficits, trade deficits between two countries should be minimized as much as possible. It cannot be I export to you as much as possible and I don't buy anything from you. So for him, that's very important. And I think for many countries, that's equally important, because we don't want one country to dump their products on other countries to dominate the whole universal markets. We hope that, as we import more goods from one country, then we are also able to export goods and services to that country. So I am actually a bit optimistic that at the end of the tunnel, we will have not only free, but as President always emphasized, fair trade. Yeah.
All right, that is light at the end of the tunnel. So we have time for one more question. So this question is for Ying. So for the investors and the family offices, what can they do to stay prepared?
Well, I mean, we talk about risk, right? And the tariffs and the geopolitics are dominating the headlines. But the truth of the matter is that they are just a small part of the bigger picture. And in reality, the family offices and the fund manager, they are also facing a stack of regulatory, operational, as well as strategic challenges, right? For example, I can list a few of them, and I actually have an acronym for it, which is, let me recall, RISTDAD, RISTDAD. Okay, R stands for regulatory complexity. Okay, and today we have CRS, we have FedCar, we have tax transparency rules, and it varies from countries to countries, jurisdiction to jurisdictions, and it's overwhelming. Okay, and the other acronym is I. I stand for infrastructure. We see a lot of small size family offices or fund manager. They wanted to scale, but operationally, they are not ready. Infrastructure and backend is quite fermented, as well as sometimes even missing a lot of proper framework and structure. S stand for succession planning. Okay, so we are entering into a period where trillions of global wealth is going to change hand from one generation to the other, but the families are not ready. So we have seen families, the first generation are creating wealth and the second generation is coming in with different expectation, but there's no proper framework. There's no proper process to address those differences. Okay, that's going to create, a lot of conflicts and probably, eventually affect their wealth as well, right? Tax is a pressure. Governments everywhere is looking ways to reduce their deficit, right? So what does that mean? It means there will be tax pressure on the, high net worth families and individuals to sort of help the government in that sense. So, DA is actually stands for digital assets, right? We have a lot of next generation wealth owner who owns NFT, who owns crypto assets, but they're messy, right? But they always have concern about where should it be held, how safe it is, what are the compliance requirements to hold them, whether it's under trust structures or other, equivalent structures. And lastly is D. D is deals, right? So, a lot of family offices, they are looking to do beyond public markets, or rather invest beyond public markets. So they are looking into doing private deals. They want to be exposed to the real businesses. But if you don't have the right network, if you don't have boots in the ground, especially, if you are coming from another country, it's going to be very, very difficult to sort of source for high quality, good quality investment opportunities. So these are the issues that the family offices, or especially smaller one, they might be facing. So, here we are in InCorp. Those problems are not problems that one firm could solve, right? So here in InCorp, what we're trying to do is we build a multi-jurisdictional platform together with a strong network of partners, the legal profession, the financial institutions. We aim to support and provide the operational infrastructure for the clients, for our family offices, and the fund manager.
Right. Thank you, Ying.
I'm very intrigued by this succession issue as I look at some of my friends who are in their second or third generations in their family. I think your acronym is very suitable, rest dad, right? They really would like to ask their dad to take a rest so that they could have more freedom to, to do their business and so on. But sometimes, you never know.
Yeah.
Yes, thank you so much. Thank you, Ying, and thank you, Dr. O, as well. Thank you for sharing your insights. And thank you to the audience for joining us so far. So if you have the questions and we did not answer them, we'll answer them through email. Thank you so much for joining us. We've taken so much time today. And I just want you to wrap up today's discussion is to stay vigilant, watch the news. There's, of course, risk, like Ying mentioned. There is also opportunities as well. There's the light at the end of the tunnel, like Dr. O mentioned. So stay vigilant, open your eyes, stay calm as well, like Ying mentioned, and continue to invest and make decisions. So thank you so much for joining us, and we'll see you at the next one. We have different topics coming up with InCorp Singapore, and we will be seeing you in the next one. Thank you so much.
Thank you.
Thank you.